All right. Welcome, everyone, and thank you for attending today's ITM 21st University webinar titled, Why Now is the Time to Consider Alternatives for Your ILITs. We appreciate your time today and look forward to sharing with you some insights on a topic that we're very passionate about. My name is John Barkhurst, and I'm joined by my colleague, Leon Wessels. Collectively, we have over 40 years of experience working with corporate fiduciaries of trust-owned life insurance. To give you a little bit more background here in a moment, but first a little housekeeping about the session today. We're using the GoToWebinar platform for this webinar, and it will be recorded and available on the ITM 21st website in a couple of days under the recent webinars page under the education tab. All phone lines are muted for all attendees, but we do encourage you to ask questions if you have any, and utilize that questions chat box that's on the GoToWebinar panel. We've allocated some time at the end of this session to answer any questions that you may have for the forum. Otherwise, if you have a question that you do not want addressed openly, please indicate so, and we'll respond to you directly within a follow-up email. As I mentioned, Leon and I have spent the last 2 decades working exclusively with fiduciaries providing life insurance trust services. ITM 21st is a pioneer in providing ILIT management systems, policy review services, processes, and best practices to help corporate trustees better manage their trust-owned life insurance holdings. We've learned a lot over the years, but nothing really compares to the experience that we gained when we began providing complete ILIT administrative outsourcing services in 2007. And I'll talk a little bit more about this model as we roll forward in the presentation. But essentially, under this program, we assume the ILIT administrative and risk management responsibilities for the corporate and professional trustee marketplace. This extensive experience and expertise is really what ultimately paved the way for us to form our own trust company in 2017. And that entity is called Life Insurance Trust Company, or LITCO. And it's the industry's only corporate fiduciary focused exclusively on life insurance trust. And later, Leon will share some more about what makes LITCO unique and how it's quickly become the largest ILIT fiduciary in the country. So why are we here today? Why have you taken some time out of your busy schedule to dedicate 45 minutes or so on the topic of life insurance trust? Now, we know from experience that ILITs are really not a desirable subject. In fact, life insurance is usually the least favorite trust-held asset. But with that said, I think we can all agree that ILITs have been a long-time cornerstone of many estate plans and are still a great tool for creating liquidity upon the death of a grantor. There's a reason life insurance typically falls to the bottom of the list for most corporate trustees. I think we can all agree it's a peculiar financial instrument and does require some specialized knowledge and expertise to properly manage. And there's no denying the fact that the management of life insurance has become increasingly more difficult in recent years. In the last 2 decades here at ITM 21st, we've analyzed over 50,000 trust-owned life insurance policies and have conducted hundreds of thousands of annual policy reviews, working with over 200 institutional trustees. And this experience really has given us the unique ability to share and be part of trends in the TOLI industry. It's provided great insight into why life insurance presents so many challenges for trustees, but really more importantly, how to mitigate and eliminate risk. So I think at the onset of this presentation, a few key statistical trends are worth highlighting. The first is current insured's age. Like society in general, the population of TOLI insureds is aging. The greatest jump in age groups in the last decade or so has been by far the 80 to 90 category and the 90 plus age category. And insureds over the age of 60 make up about 3/4 of all insureds. Life insurance costs generally increase with age, and also policy management decisions become more difficult as clients get older. The second key statistical trend is policy duration. 61% of policies, trust-owned policies, are over 10 years old. And of that, 28% of the policies are over 20 years old. Policies are issued based on current assumptions at the time that they are issued, and over the last couple of decades or more, performance and funding in these policies has rarely followed the patterns found in the original sales illustrations. So as policies age, the issues around them tend to increase. And the third key statistical trend worth highlighting is trust duration. The average current age of an ILIT is 20 years. However, the average duration is 35 years. That means as a trustee who is responsible for an ILIT has 3 to 4 decades of trust and policy management responsibilities. So jokingly, we often ask the question, what could possibly go wrong in a 40-year time span? Well, to illustrate that point, consider this. 34% of all the policies that we've reviewed at ITM TwentyFirst, both 20 years ago and even still today, are rated high risk, meaning there's a high probability they will never pay a death claim based on their current funding and performance. And if the issues are not addressed and remediated, they're likely doomed. Also worth noting that the policy issues and the overall failure rates that we see at ITM TwentyFirst are primarily TOLI with a corporate trustee, that being a bank or a trust company with the assumed expertise and experience to manage the complexities of trust-held assets, including life insurance. However, it's estimated that today approximately 90% of all TOLI is represented by an individual trustee. While this may be a professional such as an attorney or CPA, most likely the fiduciary is a non-professional individual, that being a friend, family member, business associate, etc. of the grantor. This is an alarming and growing trend and represents a significantly higher percentage than we saw 20 years ago. And at that time, most trust banks were willing to serve as an ILIT trustee. But the ILIT corporate trustee landscape has changed dramatically in recent years, further compounded by the business challenges brought on by the last year or so from the pandemic, has many corporate trustees evaluating their overall trust operations and looking for areas that are not profitable or key to strategic plans going forward. Arguably, life insurance trusts fall into this category. They're not core to most trust businesses, and the regulatory, reputational, and legal risk are ever increasing. Furthermore, many trustees are only charging nominal ILIT administration fees that don't reflect the actual cost of servicing the trust, let alone the potential liability. This has many corporate trustees pondering why they continue to serve as trustee for ILITs, particularly those standalone accounts that are not part of a broader client relationship. For a traditional trust bank, there's very little upside, if any, to serving as an ILIT trustee. And it's for this reason many trustees are looking to limit their TOLI holdings, retaining at most only the meaningful life insurance trust accounts that are linked to a significant wealth management or broader institutional relationship. So while we have seen many trust banks, large and small, exit the ILIT business entirely or in recent years, and Leon can get into this a little bit more later, it's probably more common for corporate fiduciaries to evaluate their book of business and retain only a percentage of what is deemed meaningful ILIT accounts that are linked to broader institutional or wealth management relationships. And now the definition of meaningful is different for every institution. For some, it could be as nominal as a checking account or a commercial loan relationship to justify serving as trustee for the ILIT account, while others are seeking minimum wealth management assets with AUM thresholds of $1 million or 10 million or maybe even higher. But regardless, the potential issues remain the same for those retained ILIT accounts. Life insurance is a particularly complicated asset to manage in the absence of specialized systems, processes, and procedures. And many trustees just don't have the time or lack the resources to effectively manage an asset such as life insurance. Coupled with the inherent challenges brought on by staff now working from home partially or maybe even full-time going forward, the management of this unique asset going forward will become extremely problematic. So, for many, the logical solution has been to find a specialized partner to shift much of these duties, responsibilities, and liability as possible. And for that reason, outsourcing has become a key trend in corporate ILIT administration today. Although there's many reasons corporate trustees turn to outsourcing, there's typically one factor that's almost always present in every trust department. I touched on this a moment ago. Life insurance trusts often represent a minor revenue source for corporate trustees, and coupled with the explosive liability associated with ILITs, make it easy, maybe easier than ever, to construct a business case to allocate those precious internal resources to other revenue-generating aspects of the trust operation, while ensuring a comprehensive ILIT administration program is in place through a strategic service provider partnership. For most corporate trustees, ILITs are not a growth business. Federal estate tax changes over the last decade or two have dramatically affected the number of estates subject to the tax, and thus the number of new trusts created. Certainly there are reasons other than estate taxes to hold life insurance in a trust, but I think we all realize that the main driver is that estate tax. Now, will the estate tax change to favor the use of life insurance trusts again? It certainly appears so, but since this business line is really fraught with liability, now is a great time to explore why partnering with ITM TwentyFirst can deliver numerous benefits today and long term for those meaningful retained ILIT accounts. So now I'd like to take a minute to dive into and explore the 5 key benefits of an outsourced ILIT administration partnership that you see there on this slide. The first is it provides a team of life insurance trust and policy administration experts. Banks and trust companies generally do not invest in hiring and training independent in-house life insurance experts. It's just not part of a good business practice, as the revenue generated from these life insurance trusts just do not support the business case. Trust and relationship officers are fantastic at a number of things as it relates to the overall trust operations, but generally speaking, managing life insurance proficiently is difficult for many. Life insurance is an asset that really has endured tremendous stress in the last 15 years. Case in point, dealing with cost of insurance increases that more than double the carrying cost of a policy. Having the skills and the resources to know when to sell a life insurance policy and the advantages and disadvantages of a life settlement transaction. Knowing the possible tax traps in a policy loan situation and the subsequent trustee liability. These are just a few of the many things a trustee must consider in the daily course of managing trust-owned life insurance. One miscue that would have been obvious to a person trained in life insurance policy management could cost an average general trustee hundreds of thousands of dollars or more. Today, more than ever, corporate trustees need independent expertise to keep an eye on their life insurance trust. It's really the only way to ensure prudent life insurance trust and policy administration, which will save trustees substantial sums of money and avert problems that could result in negative impacts to policy coverage. Secondly, it allows the trustee to focus on what they do best. While most corporate trustees do not have staff with life insurance expertise, they do have staff with core competencies that can help generate revenue in other more profitable and strategic areas of the trust operation. In 2021, with the stress on trust departments to focus on more profitable business lines, outsourcing administration of non-core assets like ILITs can help institutions achieve these results. Third, it will identify and reduce overall cost. For most TOLI trustees, the relatively small number of life insurance trusts under management compared to other asset classes really doesn't lend itself to creating the efficiencies that an outsourced firm like ITM TwentyFirst can provide. A trustee handling different types of policies from numerous carriers must stop and research each and every issue. But the reality is ITM TwentyFirst has seen and solved these issues many times before while handling tens of thousands of trust-owned life insurance policies. The variation and complexities of life insurance is easier to manage when the process is scaled. The ability to interpret the administrative details of a trust document, oversee the compliant management of the trust, and resolve issues quickly and prudently is ultimately enhanced when you have experts focused on one business line, in this case, life insurance. In most trust departments, life insurance has taken a backseat to other more profitable business lines, and the true cost to administer ILIT accounts is not really even known. ITM TwentyFirst provides a known fixed cost, typically far less than current costs incurred by traditional banks and trust companies administering life insurance trust in-house. The fourth benefit, as we see it, really is risk mitigation. It mitigates the legal, reputational, and regulatory risk. One of the most important factors in managing any business line is recognizing and understanding inherent risk, and TOLI is no different. While it may be a small part of a trust department's overall revenue, it represents a major source of potential liability. And when a business line that only generates an average trustee fee of $1,500 annually or less, but can lead to 6 or 7-figure settlements, I think it's time to take notice. So by partnering and outsourcing ILIT administration to ITM TwentyFirst, trustees realize a partnership with experts in the field and benefit from proven risk mitigation processes and procedures. And with the increasing regulatory oversight and compliance requirements, the outsourced partnership helps avoid unnecessary regulatory pitfalls as well. And last but not least, outsourcing ILIT administration brings peace of mind. Most corporate trustees see TOLI not as a growing business line, but as a growing liability, and with good reason. The low interest rate environments, market volatility, cost of insurance increases, and various other external pressures on this asset class in recent years have made managing life insurance more difficult than ever. Retaining life insurance trust professionals in-house is likely not an option based on economics. But a partnership with ITM TwentyFirst will bring peace of mind. Peace of mind that there are controlled administrative processes, risk mitigation procedures, and peace of mind that the ILIT duties, responsibilities, and liability are shifted to an entrusted partner. So for those trustees that feel it is necessary to retain some percentage of their life insurance trust accounts, I think the value of outsourcing TOLI policy administration and management cannot be overlooked. Regularly, corporate trustees experience administrative miscues and make the wrong policy management decisions, and that creates real fiduciary liability. Most every check written to settle a dispute around a life insurance trust is really written in confidence, but I assure you, many are written. Outsourcing ILIT administration can only make a trust operation more economically efficient and increase client service levels, but it can also save the embarrassment and cost associated with disputes or litigation. And with that, I'd like to ask Leon to join the conversation. He's going to spend some time talking about the other key trend that we're seeing in the corporate ILIT fiduciary space, and that is getting rid of unwanted life insurance trust accounts. Whether it's 20% of a portfolio or a 100% divestiture, many trustees are looking for a solution to offload existing ILIT accounts and really discourage new ILIT business going forward. And he'll highlight specifically how LITCO is uniquely positioned to be a strategic resource and partner in this process, both now and in the future. Leon?
Great, thank you, John. And hey, John, are you switching presenter to me, or are you going to change the slides for me?
I can change the slides for you, that's fine.
Great, thank you, and welcome everyone. Thanks for taking time on this great summer day to listen to John and myself. As John said, we've worked together going back 20 years, and while we technically don't work for the same company anymore, we're still within the same family of companies as I'm now with Life Insurance Trust Company. And so I just wanted to take a couple minutes and talk a little bit about who we are and why we did what we did by creating LITCO. So first of all, you know, the primary reason for our existence is the relationships that I've built with banks and trust companies over the last 20 years. And it seemed to always come down to, you know, whether those clients started off with just kind of a policy review service that we started with in 2002, or to some of those relationships that evolved to a full outsource relationship. But ultimately, we had so many banks that would just say, "Hey, Leon, can you guys just do it for us? Can you just be the fiduciary?" Because one of the things that differentiates ITM TwentyFirst and LITCO is that ITM 21st is a service provider. Yeah, they're a back office, and they document in the agreement all of the things that they're responsible for. At the end of the day, they truly are not the fiduciary, and so that one component was missing. And then we had a lot of requests for that, and so our executive team and board got together, and we decided to file for a charter in 2017 in South Dakota. Kind of a side note on that, I think they thought we were absolutely nuts when we presented our plan to just be an ILIT trustee. Nevertheless, that we were granted the charter. We began operations in November of 2017. We do have offices located in Sioux Falls, South Dakota, where we currently have 4 trust officers that are led by Tony McKillop, who is an absolutely outstanding person, and one of the few people that you'll speak to and come away with thought that this guy really has a can-do attitude, and it's actually pretty refreshing, especially when it's for ILITs. And again, as I said earlier, we're a single-purpose entity. We focus only on the insurance trust, which also would include like split dollars, and we do handle some trusteeships of premium finance policies. But our domain is all around life insurance. So anything that's life insurance related is what we're going to provide services for. And it's also critical because a lot of those early requests from banks and trust companies that today are strategic partners of ours, it was important for them to get a commitment from us that we would not enter into the other asset under management business. And so today, a little over 3 years since we started, we have 1,942 trust accounts currently that are represented from probably all 50 states. I haven't confirmed that, but I'm pretty sure that's the case. We're currently at $5.2 billion in death benefits that we have under our management. And, just talking a little bit about our growth, because it has been unique. 99% of our growth is, next slide, John, has been from acquisition. And so because of those early requests and partners and friends that we've made over the years, we were able to immediately begin a process where, we've done acquisitions. And that was really kind of the key to our success in our entire business plan was, how do you move these things from one trustee to the other? We've seen in the past how trustees struggle with trying to get rid of unwanted accounts, perhaps. And when you go through the traditional, of course, it comes down to the document itself, but typically you have the ability to resign as trustee, but you're really on the hook until they find a successor. And if a successor is not named, I've seen adversarial relationships that have endured a couple of years before the original trustee ultimately went to court to be removed. And so it can be a daunting task to try to be removed as trustee, especially, on a large number of them. So these 20 acquisitions have really represented, some banks that had 10 or 12, maybe orphan accounts that they wanted to move, up to our largest being 700 accounts, where that institution just wanted to completely exit the business. To date, I think 3 of the top 10 banks in the United States have done transactions with us. And so, we've been pretty comfortable working in whether it be the small bank market or even the large bank market. We currently have 9 pending acquisitions that we're working on, which is kind of an art in itself, which I'll talk about in a few minutes. Our goal is to be at 3,500 ILITs by the end of 2022 and 6,000 by 2024, with hopefully somewhere around $16 billion in death benefits. What are the keys to LITCO success? I think it kind of really starts by what I mentioned, and I'm going to get more into, is the process of removing accounts or transferring accounts from a current trustee to us. But at the heart of it is to stay competitive, to be relevant, our fees have to be in line. We see fees, today, John and I in our past have seen these fees range from 0 to as high as $10,000 a year. And again, for us, we're able to apply a fee structure. If it's an acquisition type case, our goal is to get our fees to $1,250 per year. If it's new business, our goal is to initiate or originate that trust at about $1,500. And the reason we can do this is because we have joined the group of a growing number of trustees that have included what they call a back end or a termination fee. Ours, I like to word it as a success fee because we don't get paid unless the policy pays a death benefit. And so we have a vested interest in making sure that that trust remains on the books and that those death benefits ultimately are collected and distributed. That termination fee is pretty minimal, especially when you average it over the 35-year typical lifespan of an ILIT. So if we stay competitive at $1,250 per year on an annual basis, and we serve for 35 years, and we have a 1% termination fee, and the average ILIT is $3.2 million, we know we're getting about $32,000 on the back end, which when you blend that over the 35 years is pretty reasonable trustee fee. And again, for larger accounts, we certainly reduce those fees. We make concessions on them. The regulators are certainly not a fan of gouging or having large fees on the once the trust becomes funded, and so we need to make sure that we meet those standards as well. Another key critical point for our ability and our success is our scalability. What John failed to tell you is that LITCO is now his #1 client. So we are the largest trust company for life insurance, or for ITM 21st. And we're taking full advantage of the services that he's outlined, and which allows that scalability factor. And when I talk scalability, I'm talking about automating a mailroom and being able to account and scan and OCR data into a system so that the people that are monitoring and managing those accounts have real-time information. It's not stuck in a mailroom. It's not waiting for somebody to open an envelope. It's immediate access to information. And whether it's that or it's to the end point where we have a whole team of CLUs and CFPs and life insurance experts that are constantly watching every single policy that we are responsible for. I often say that it's the world's largest air traffic control system, but instead of tracking airplanes, they're tracking insurance policies. And if a single hiccup occurs in the life of an insurance policy, we are made aware of that from the teams at ITM 21st. So scalability and back office are critical. Obviously, customer service is key. People are only going to stay if they like you and if they feel they're getting good service. And the output, the reports and the information, and the real live conversations that grantors, their advisors, and the beneficiaries can have, it certainly makes a pretty big difference in retaining these accounts. And then probably, our commitment clearly is there. We're 100% focused on ILITs, but I think at the end of the day, the relationships we have with other banks and trust companies is because we're staying in our lane, meaning that we don't have eyes for your clients' other assets. This is not a loss leader or a lead system to mine other assets away from our partners. We clearly will not accept or take control or manage other assets that are held in conjunction with the ILIT or actually in the ILIT itself. What we do in those cases is enter into an IMA account where we actually push the management of those other assets back to the previous trustee or an alternate trustee so that they have those assets under management. So those are really the keys to our success. How does the acquisition work? I'm just take a couple minutes and talk about that. It really starts with a document, and I'm going to get into the details of that document on our next slide. But so it requires an acquisition agreement for certain trust accounts. It really requires an experienced project team and a comprehensive project plan. And just to note on that, it really is the roadmap to having done 20 successful transactions with over almost 2,000 accounts, is making sure nothing hits the ground as we pass the baton from one trustee to the other. So whether it's the initiation period and dealing with boards and executive approvals and a communication plan, the agreements themselves and the planning of the process and laying out the project, to the sharing of information, to ultimately the execution and the transfer of the accounts over to LITCO. So, and then of course the communication and messaging is critical. Blindsiding clients is not a good way to go about this. telling them you're resigning without an option is kind of hard. As I mentioned earlier, you'll get a lot of pushback from clients through that process. But the acquisition, the way it works is again, the acquisition agreement itself, and just a quick outline on that, is that at the core of our legal process that surrounds the transfer is a simple, but yet it's an effective legal document. It's called the Agreement for the Transfer of Certain Trust Accounts. It's important here to note that while the document suggests it's an acquisition of assets, it's really not an M&A transaction. The agreement outlines the terms and the conditions surrounding the current trustee's intent to resign and LITCO's intent to succeed. So the document references what we call an Exhibit A, which is our first filing to the court, which lists just a generic list of names, no other additional information, and the date of that particular trust. And so we attach a copy of the acquisition agreement with an Exhibit A, and we file a petition to the court in South Dakota. And that first petition is to notify and also receive approval from the courts for us to proceed with the proposed transaction. So we're asking the court to keep the information confidential, to approve the executed agreement that we've submitted, and to approve the notice provisions to the parties of the trust. In addition, we provide an Exhibit C, which is a notarized resignation statement from you, and a Exhibit D, which is a notarized acceptance statement from us. So at that point in time, we'll get an acknowledgement from the court and an approval, a court order to proceed, and then we go to work on what we call the Exhibit B. And the Exhibit B is prepared really by us and our team with your help, and it really is a detailed list of the accounts, the policies, and if there's other assets or notes and things in them, as well as the grantor and the beneficiary's information. So that Exhibit B, it does not get submitted to the courts until we both agree that the list is accurate and complete. And then it is ultimately included in the next step, which is our second petition to the court. Our second petition is essentially, it's prepared by us and outside counsel. It's filed to the court along with the resignation statements and the acceptance statements, and then a final account holding statement, which is part of the official notices that we send to the parties of the trust. Now, I'm going to just interrupt myself a moment and say that prior to us doing a mailing, we're asking that the current trustee use some of our sample templates to send a courtesy message explaining what you're doing and why you're doing it, and why you've selected LITCO to be the successor or to be the potential successor. And so following the courtesy messaging, we'll go through the official messaging, which is the official notice required by the court, has to be provided 14 days prior to the final court order, which ultimately becomes the new date for our taking over as trusteeship. So that whole process, we've done it successfully. As I said, we cover the costs associated with that process currently. I don't know how much longer we're going to do that because we've been pretty much inundated, but so far everything has worked smooth. We have had no objections. We've had no one show up in court and contest what we're doing. We have dealt with individuals who call up either after the courtesy messaging or the official notice and have questions, and we resolve those issues. And if ultimately we think that it's best that they be removed from the proceedings, we will remove them. We've had cases where a son will call up and say, hey, we just put dad in hospice. We don't think he's going to live much longer. Do we really need to go through this right now? Then obviously the answer is absolutely not. We don't need to move this account. We've had others that just want to find somebody local where they can go in and have a cup of coffee and a donut with, and they would just like to find somebody locally to work with, and as long as they can accomplish that in the time frame prior to the final court proceeding, they're welcome to do that. If by chance that doesn't occur and they actually move to LITCO, we will not charge any fees, no costs associated with allowing them to move to an alternate trustee once they've been transferred to us. And so, it comes down to that commitment and the service and the desire to make sure that each of these customers is treated with respect and is granted the ability to do and work with whom they wish. The process takes us anywhere from 45 to 90 days. And that's, again, as small as a 10, 12 I try not to do these transactions for less than 20 accounts, but even the larger ones, we've been able to successfully move them in 90 days. What's happened as a result of that is we've created a strategic partnership with a lot of these institutions who, even if they've retained the meaningful book of business and they've maybe pushed 20, 30, 40, 50% of the non-meaningful business to LITCO, because of a unique provision in our agreement, where we agreed to push the funded ILIT back to the original trustee once the grantor is passed. So if there's a continuation of trust provision, or if the trust advisors from your bank want to have an opportunity to work with the beneficiaries, we provide notice to the previous trustee when the ILIT is funded, and they, by agreement, court-approved agreement, have the ability to recall that trust back to them as trustee without consent of the beneficiaries. And so we're all in on this relationship where we'll handle the heavy lifting and the intricacies of managing the insurance policies until they are funded. But we do not have the ability to manage the funds once they're in our account. So we need to move them to someone. And so in our agreement, it is allowed and approved by the court that we move that account back to you if you elect to take it. So that's a really important part of our partnership with other institutions, is that not only will we take these, we'll pass them back to you, but we'll also deal with the requests that you get now. So if someone contacts you and wants to open an ILIT, but they don't have a meaningful relationship, or you've decided not to be in the ILIT business, how can you play along? And it's a real important thing to address, and that we will make the trust officer, trust advisor on your side an interested party within our system. We'll have the grantor sign the authorizations to allow us to provide the information back to you. So if you are managing other assets or have a broader relationship, you'll have the complete picture by having the ILIT information. We provide a resource hub of documents and materials to support any of those conversations as new accounts are being opened. But it's really important for us to keep those advisors engaged and relevant in the relationship. So the strategic partnerships, again, are critical so that you continue to have, an answer for clients who come to you, and you may prefer not to be the trustee of the ILIT, but you still have a partner that's willing to take it and treat them well. So with that, I'm just going to wrap it up. And John, if you want to open it back up before talk a little bit about the resources and Q&A.
Yeah, thanks, Leon. And that really does conclude the core content of the session today. So hopefully it was time well spent, thought-provoking for many of you, and you'll take advantage of some of these resources that we've referenced and talked about here in the last hour, which is highlighted on this slide. And again, a reminder that this presentation, as well as the actual session itself, can be downloaded and viewed at either the ITM 21st website or the Life Insurance Trust Company website as well. So again, thanks for your time, everyone. There were no questions. I'll maybe leave it open for another minute if there's a question that pops up. But otherwise, we want to thank you for attending this session today, and look forward to seeing you in a future webinar. I don't see any questions coming through. So again, thanks for your time, and feel free to reach out to either Leon or myself if you have any questions about potentially exploring a partnership with LITCO or an outsourced partnership with ITM 21st. Thanks again. Take care.